Welcome back, beautiful people. It's Joe, aka the Nomad Investor, where dividends, freedom anywhere is the goal. Huge shout out to all of you who have subscribed overnight. We are at 112 subscribers and 10 videos have currently been launched on this channel. I did just film the 11th one prior to this portfolio update, which I'm about to do. And that video is about how to use margin on Robinhood and some things that you guys need to keep in mind. So if you want to check that out, feel free to go on my channel and view that video. It would mean a lot if you're interested in margin or using margin. And lastly, if you are new here, please subscribe. It really goes a long way. It helps keep me motivated to continue pushing out this video. And most importantly, you get to see every single video I release on this journey of going from $0 to $1,000 a month in dividend income. With that being said, let's get into things. So first things first. The videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial or professional advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional. Okay? So with that being said, let's get into the game plan and goal. So if you're new here, I'm going to explain exactly what the approach is. But if you are not new here, you guys can just bear with me for a few minutes. So basically, for growing a small portfolio from $0 to $1,000 per month in dividend income, I am doing the following. I have two sources of income: remote work income and business income. So I'm going to be taking a minimum of $300 plus per month, ranging to around $1,000 plus per month, and depositing it into my Robinhood taxable brokerage. My business income fluctuates, so this amount may fluctuate as well, even though the remote work income is consistent. Now, I'm treating this brokerage like a business, and I'm aiming for 30% plus high yield. And I'm taking the money that I invest into Robinhood, or I throw into Robinhood, and I'm investing it into high yield income ETFs such as WPAY, HOOW, QDTE, XDTE, XPay, BTCI, and more, right? But because this is a small portfolio, I'm capping it as of right now at a max of 3 positions. Now, this may change in the future. Who knows? But I'm basically going to be alternating between anchors and satellite ETFs. This is part of the core satellite investing strategy or investing approach. I actually learned this from watching a guy by the name of Eugene Vasquez's channel. He actually has been watching my videos, so shout out to you, man. But if you guys want to learn more, I highly recommend you check out one of his videos. I'll probably post like a little image showing the title of it in this video clip right here, just so you guys can see. But highly recommend checking out Eugene's video on this. It breaks it down really easily, and he kind of goes into how he approaches it. But I'm going to be taking the dividends that get paid out from these high yield income ETFs, and my goal is to reinvest the weekly and monthly dividends back into the portfolio, more specifically back into each position. That's kind of the goal, or which is also known as drip, or I'm going to be stacking the dividends to purchase when the market is down, which that's kind of where we're at right now is in the current state of things. So drip plus always compounding is the portfolio growth strategy. And basically, I'm going to be rinse and repeating this until the account hits $1,000 per month in dividend income. Now, again, none of this is financial advice, and this is for entertainment purposes only. Now, real quick, I wanted to share with you guys the dividend income milestones that we have. So we have smashed the $100 a month goal, and we are currently on track to do this $200 a month goal as well. I'm doing these short milestones to celebrate the small wins leading up to the bigger goal along the way, which is $1,000 a month. If you guys want to see which milestones I have, you can pause this video. But without further ado, let's get back into things. So as you can see, for those of you on the mobile, I have zoomed in. So as of today, you can see the portfolio is up $33 pre-market on October 16th, Thursday, October 16th. It's around 5:48 in the morning. And yeah, I just got done with the gym session. I feel rejuvenated. I feel recharged and fresh. So this is what we're at, okay? Now, for the week, we are down still. We are down $168.11, aka 4%. It is brutal. It's hurting so bad. But for the month, we're back up. As you can see, we were around here, I think, last time I was filming a video, I believe on the 14th or 15th. I can't remember. Maybe we were up a little bit, but we're doing a lot better. We are starting to see a little bit more of that coming up. We did have the portfolio kind of hit these testing zones, these lows. But as you can see, we set a higher low, and I think we're going to start moving in the right direction. We shall see. I'm not a magician. I'm not an oracle. I'm not Warren Buffett. So I guess we'll find out. And then just so you guys are aware, you'll see that the cash balance has temporarily increased in value. And I'll explain what I mean by that. So the WPAY dividends, they have that plus sign there. They're getting reinvested. And I'm actually going to be changing my drip strategy. I'll explain that in a bit. But they're getting reinvested. That's why there's this pending order of $34.63. But my HOW dividend is currently going into the cash amount. So it's adding on to there. And my plan is to actually reinvest that probably into WPAY, considering that I need to lower my average cost per share to be in the positive again. That being said, I haven't used any margin yet, and I probably won't for quite a bit unless I really see a good opportunity, a good play, and I think it could work out. Okay, so there's that. And then let's hop into each position real quick. So for WPAY, we are looking good. We're only down $35 right now. So I guess technically with the payout that I received, you can say that, I'm doing pretty good, or I'm not as down, because look, we made $34.63. So I'm only down like less than $1, which is pretty cool to see. And then, yeah, these are our shares, $43.41 shares. And our average cost is $53.90. So as you can see, I definitely missed out on the opportunity to invest into that $52.20 range, but it is pre-market, so that's something to keep in mind. But I do want to dollar cost average a bit more. Preferably, I want to get down as low as I can with this average cost while we have this opportunity, because if you look at the chart of this, let's hop over here. We have a very bullish chart minus the recent dip due to one thing and one thing only: the tariff news, the tariff fears, the tariff scares. Shout out to the orange man with the blonde hair, if you know what I'm saying. It's all his fault. Well, not all his fault, but it is what it is. It's just part of the game. But this is an opportunity. That's the way I see it, because we did set lower lows than that previous low that we had back in September 2025, or September 25th, 2025. So that's something to keep in mind. And then let's hop over to HOW. We are still seeing a pretty good chart. We're at $73.09 a share. I'm still at an average cost of $70.93. This is a position that I really like a lot, but I'm currently not acquiring more of, because my current portfolio diversity is a little bit higher than I'd like it to be. But I'm still up $28.04. But I will say this: if this at any point in time starts dipping below, like at this point, I didn't even see this. This happened at around 3:40 yesterday, which unfortunately I was not by my computer at that time, but it did dip below my average cost. This is an opportunity where I would like to buy some more and lower my average cost. So that's something to keep in mind. Okay, guys? But with that being said, let's hop into my dividend sheet. Okay? So I do need to adjust some of these numbers. Let's go here. We got $714, and this will probably change, but just want to make sure this is accurate on here. And as of the last number update, this is what we can see. So this isn't going to be pulling in the current data until the market opens at around 9:30 in the morning Eastern time. But we have this total return currently on both positions. Oops, actually, excuse me, my mobile friends. Let me zoom in a little bit more on here. I hope this is okay for you guys. So here is what numbers it's showing. And yeah, this is what we like to keep paying close attention to. So we are still down on the market return, as I mentioned previously, on WPAY. But again, that's just a more buying opportunity. It's one of my cores as of right now, and I'm going to keep investing into it to lower my average cost per share. Ideally, I would love to get to the $52 a share mark. It doesn't have to be $52 on the dot, but that would be ideal. However, I do want this position to go back into more positive momentum. So I also do want it to continue to going back up to that $56.45 mark that was the 52-week high. Okay. But yeah, this is the state of things. So our total return on HOW is $55.27, and our total return on WPAY is $10.06. And then as you can see, percentage wise, we're doing good on HOW, even though it's significantly lower at 5.99% and 0.43% on WPAY only. And then of course, nothing has changed on the dividend log, just to show you guys. I know this is zoomed in quite a bit. I really don't know how to do this. I don't know. This is kind of, let me move myself and let's decrease this. So as you guys can see, HOW $55.01 for the year, and then WPAY $51.30 for the year. And then we are at $106.73 for the month and around $140.90 for the year. So not much has changed there because we've already gotten paid our dividends. And yeah, that's something to keep in mind. And lastly, I wanted to hop into Snowball Analytics. Let me zoom in here as well for you guys on the phone. This is as much as I'm willing to go. So this was last synced about 12 seconds ago. As you can see, I have a negative IRR as of right now and a negative total profit as of right now. But our passive income is still looking pretty good. We're going to earn $3,410.95 annually if we maintain this passive income percentage. So that's pretty good. We're basically doubling our investment. But yeah, let's scroll down a bit here. And we are expected to make around $37.91 as of this prediction for dividend payouts for my current positions. So with that, like I said, we would possibly be exceeding the $200 a month dividend milestone, which I'll be celebrating that next when that happens. If it happens this month, but if not this month, for sure next month, right? And then last but not least, this is the current state of things. So last time I recorded a video using this goal chart, we were at 25%. We were at a quarter of the way to reach our $1,000 a month in dividend income goal. But as you can see, we are now 28%. So we've increased by 3% to reach that dividend income goal. So it's going to be achievable in 1 year by 2026. So that's cool to see, guys. And this is the mark. And it says that my portfolio should be around the $20,000 mark. And the safe scenario is my portfolio, I guess, will be 4.3K. I'm not really sure if that's what that means, but yeah, that's what it says. So with that being said, yeah, guys, that's pretty much it. I don't have too much of an update for you guys. I know you guys did recommend certain stocks to me like XPay. Someone said check out TSYY and a few other positions. So I'm going to be taking a deeper dive into that and probably doing that in the next portfolio update video that I record. So with that being said, I hope you guys really enjoyed this video. And if you haven't already, smash that like button. If you are new here, subscribe to join in on the journey. And last but not least, until next time, take care.